So it gives me great pleasure now to bring on board Anish Shah on this edition of India Reboot to talk about the impact of second wave, how exactly are corporates preparing themselves in case, God forbid, there is a third wave, the whole issue of semiconductor and chip supply, how auto companies are dealing with that, and how the real economy has moved, given that the impact of the second wave was very large and powerful in the rural India. Mr. Shah, good morning. Thank you for joining us. Data demand indicators have started normalizing. There's a marked improvement between May and June, and the initial data points what we've got for the month of July also are looking quite encouraging. What is your sense? Do you think the entire effect of the second wave is now behind us?
I would say that we are seeing a lot of momentum. I wouldn't say that the entire effect is behind us because there are certain segments of the economy still recovering, and that will take some time. But across many of our sectors, we are seeing strong demand, and that is auguring very well. Rural India, again, is leading the way. Tractors business has seen remarkable growth across the industry, in fact, and that is a good sign for us.
In the first chain, a lot of supply chains were disrupted. More than demand, supply was a challenge. In the second wave also, even though the supply chain has not got disrupted, there are specific pockets which could be a trouble for an auto company like yours. We know there is a semiconductor shortage, and given that we got a warning from Tata Motors 2 weeks ago, how should one read into the semiconductor shortage and what it means for auto sector?
The semiconductor shortage is actually a global one, and we've seen auto companies in Western economies, in fact, impacted a lot more. It's being driven by global demand and supply right now, less due to the impact of the pandemic overall. There have been some disruptions, but they are getting back on track. We've had some disruptions with fuel injection in the past. We've corrected most of that. As we grow further over the next few months, we may see some disruption coming in, but we don't expect something significant at this point in time. But the world has changed. We have to look at supply chains very differently than what we did before. And that's part of what we need to do over the next few months.
So what is the real situation? I mean, do you have adequate semiconductor availability, because this is an important period for you because demand is come back, festival season is around the corner, and also you are in the middle of new launches?
So I would say that we are comfortable overall, but not to a point where we feel that the problem is behind us. We still see this impacting some potential numbers. At this point in time, it's reasonably fine, but with the new launches and with the growth that will come in, it may impact some numbers if we don't get adequate supplies. So we're working with our suppliers right now. At this time, we don't see any potential crisis, but we don't see ourselves completely out of the woods as yet.
So what could be the constraint? Could it be that you have more demand and less supply? I mean, I'm trying to understand from you that there are two ways to understand the demand scenario. One is demand is coming back, you're not able to supply. Second is that you're able to preempt the demand and you're keeping the stocks ready.
We are keeping stocks ready, but we do expect a far greater ramp up in demand, especially as we come up with newer models. And therefore, what we're doing is right now working to ensure that our supply chain can meet that significant ramp up. For the levels we are at today, I think we are comfortable. I think as we look at significant ramp ups, we need to make sure that the supply chain can work. So that's really what we're working with right now.
Just to understand the guidance or the forward-looking comment which we got from the management when you declared your last quarter numbers was in a sense indicative that the tractor sales had peaked out, and that was the mood that point in time. The rural India had got affected. Is the mood now distinctly different? Because you did mention that tractor sales are doing very well. Are they significantly better than last time when we spoke, and especially if you have to pick it up from your Q1 commentary, I mean your quarterly result commentary?
So we declared tractor results for June, and we were up 30% year over year. Now, June last year was a very strong month. It wasn't really impacted by the pandemic. Well, April was, May got back on track quickly, and June was a significant growth from the prior year, which is June 2019. So this has been a positive surprise. And we had not expected such a strong bounce back so quickly on the tractor front. We had seen a slightly lower sales level in May, and some of this may be recovery from May, but we are at this point seeing very strong demand in rural areas.
About your plans to invest in the EV space, and you did mention that at the right time you would be open to a partnership. What is the right time?
There are going to be multiple partnerships in EV. This is a space that is evolving fast with regard to technology in EV, with regard to batteries, charging infrastructure. There will be multiple partnerships that come in also for different product types. So we are at this point in time working with various players globally. And in addition to that, we are in the process of launching our top of the range electric vehicle, which is a Batista, which is arguably going to be one of the best electric vehicles in the world at double the horsepower of a Formula One car. So the technology that comes in there will be very helpful for us as well. So this space is going to see a lot of changes over the next 2 or 3 years, and we would expect a fair amount of partnerships that will help us position ourselves better in this space.
If I look at what is happening in the non-listed space, and especially the so-called unicorns, how internet companies are getting re-rated, how platform companies are getting re-rated, how brokerages and auto companies are getting re-rated, is there significant unlocking which could happen in any of your so-called new tech investments? They may not go public right now, but looking at how things are getting re-rated, it's a Mahindra brand, you've got big investments in a lot of your internet stroke platform companies. Are you looking at unlocking something?
So we are looking at significant growth in many areas. We have identified 10 growth gems, all which have a potential for $1 billion market cap. And in addition to that, we are looking at setting up new age platforms where Mahindra will not take a majority stake, or we may have a majority stake to start with and then go to a minority as the business grows much further. We've had some examples of success in there, like First Cry, and another one that's fast coming up, which is Porter. And there will be more on that front as well. So we do see unlocking across multiple ways. One is through these new age platforms. Second is through IPOs. Third could be potentially bringing in partners and unlocking some of the value. But we've got 10 growth gems identified today with $1 billion market cap potential. 3 of them are listed, which is life spaces, holidays, and logistics. And we feel fairly good about being able to create that value for our investors.
The big change for the Mahindra Group has been that you have changed your capital allocation policy. You've been very ruthless in perhaps getting rid of businesses which do not make sense and subsidiaries which are loss-making. That heavy lifting has been done. What is next now?
Next is driving growth while maintaining the fiscal discipline, while maintaining that ruthlessness, because we need to make sure that we meet our return targets, but at the same time, we've got to grow in a significant way. So what we have committed to is an 18% ROE with a 15 to 20% growth.
When I talk to shareholders, they said, look, we care about market cap. When I speak to professionals and CEOs, they say market cap is a function of stock markets. We are doing our job. Haven't asked you this question, so let's debate it. What is the importance of market cap? Do you value market cap? Do you value stock market reaction?
So market cap is obviously important because one of the key delivery aspects for us is to reward our investors. And our actions are focused on what will drive market cap. At the same time, I would say that in the short run, there are various factors that come into play. So we're not looking at market cap day to day. What we're looking at is what are the key inputs that we need to put in place to be able to create a greater market cap in the long term for our investors.
Markets focus on 2 things, sir. You know it more than me. Cash flow and return on equity and ROS. Let's talk about these 3 factors. In next 3 to 4 years, I'm not getting into guidance because I know I will not get a number on guidance from you. How are you planning to invest your cash flow? And what kind of cash flow are you likely to generate?
So you're absolutely right, Nikhil. One is cash flow, ROE. The third aspect I'd put there is growth. These are the three factors that really drive market cap. Cash flow, we've seen a very strong comeback. We generated over 10,000 crores of cash last year. Some of it was one time, which we have talked about, which is roughly about 3,000 crores. But we are on a very strong trajectory for cash flow. ROE, we've got all the heavy lifting behind us. We are on a very strong path to get to 18%. And growth, we've got a fair number of things that are going on well. And we started seeing results in many of them as well. So from all of these, we are well positioned today. At this point in time, we obviously will not be able to give guidance for the future. But to your specific question of how do we invest the cash flow, what we're looking at is ensuring that any investments we make have a clear path for high returns. And if not, we will return it to our investors.
Mahindra and Mahindra was a tractor company. It morphed to become a very successful auto company with a formidable presence in the SUV market, and now you're moving into the electric space. Hypothetically, if you're having a conversation after 3-4 years on Mahindra's auto business, can I say the business could be divided into 3 equal parts by the next 3 to 4 years, the tractor business, the passenger car business, and the electric business?
I would also expect a number of our other growth streams to become significant. So it will likely be more than 3 parts.
So what could be that fourth or the fifth part? I am only aware of 3.
So as I said, some of our listed entities are doing very well and are seeing significant growth. You may or may not count them in the growth for M&M overall, but as I look at value creation for our investors, that is a key aspect of it. As we look at some of our unlisted entities, we're also seeing some great potential in some of them. Excello, which is into auto recycling, and specialty steel, which will also provide some of the inputs for electric vehicles, is a business that's very well positioned today. And there are a number of other examples we have there. So I would expect growth across some of those businesses as well to start contributing more to the overall M&M picture.
When you look into the future, a lot of corporates are telling us that how China blossomed between 2000 and 2010, India will do the same between 2020 and 2030. Do you think the optimism is stretched, or it's realistic to be excited about what would be thrown at us in terms of opportunity as a country?
I think we are very well positioned today. Right? So let me just take a minute here to talk about what's happened over the last 12 months and what we see going forward. In the last 12 months, we saw digitization really being embraced. Digital payments were up sharply, e-commerce up 30%, making India the fastest growing e-commerce market in the world. Rural India has shown remarkable resilience that we've talked about. While private consumption was hit badly, we're seeing a bounce back on that front. And the corporate sector was actually very well positioned. Despite the pandemic, the surprise was that as we saw net profit of a sample of close to 5,000 listed entities, this net profit was 5.5 lakh crore in F21, almost 2.5 times the 2.1 lakh crore in F20. This was a result of a sharp fall in input costs, but that means that companies have better balance sheets and are ready for investment. So that now positions us for the future. What do we see there? We see a GDP rebound that will likely be stronger than expected. Interest rates will remain low, though there is a concern for inflation. We must watch out for that. Fiscal targets are unlikely to be breached. Tax collections have not declined as much in the second wave as we saw in the first wave. There is a strong export surge. We're seeing a very strong global demand and a continuing strength in rural areas. So given all of this, I think India is positioned well. What do we need to do? Right? The first thing we need to do is around vaccination. We are in overdrive mode today. India has now become the second in the world with 34 crore doses, overtaking the US, in fact. But as a percentage, we are still not at the 50 or 60% that we've seen in various advanced economies. And what we've seen at the threshold is a much higher level of activity. So the question is, can we go even faster? And the second part is really position India well in the global supply chain. Companies globally are looking at changes in supply chain because of the disruptions we've seen right now. And India is positioned well. A strong push on infra will help us position India and can put us on a growth for significant GDP increases over the next 10 years. So at this point in time, I'm optimistic, but there's a lot of work to be done.
How prepared do you think Mahindra Group is if, and I'm keeping my fingers crossed, hoping and praying that we don't see a third wave, but if there is a third wave, what is your level of preparedness?
I would say very high. Having been through the first two waves and having come out strong from that perspective, we are ready for it. Again, we hope it will not happen, but we have to be ready for it. The key comes back to protecting both lives and livelihood. And what we have seen through the second wave is a very strong partnership between the government and industry to ensure that both are protected well.
Have your operations normalized, Mr. Shah, pretty much across India, across geographies?
Yes, operations have normalized across India, across geographies. We do see some supply chain issues that we talked about earlier, but beyond that, we are pretty much back to normal operations. Except for the fact that we still have work from home arrangements, and that's something that we will continue to do till we are sure that employees are safe coming back to office.
Mahindra Group is present in hospitality, it is there in manufacturing, it is there in automobiles, it is there in farm and farm equipment, it is there in technology. Which is one business where you are surprised with the comeback, where demand has just not whittled despite what has happened on the medical front?
In the last month, I would say that was a tractor business. We've seen very strong demand that's come back in the tractor business. Beyond that, I would say that we've seen that across hospitality. We're starting to see people really wanting to go out there and spend more time. Real estate, we're starting to see good demand coming back as well.
And the reverse of that is that where are you disappointed that you expected demand not to drop, but demand has dropped?
I would say that we're not disappointed in any of our industries at this point in time because things have moved far better than what we had expected, given the level of impact that both wave 1 and wave 2 have had. We are today in a far better position than what we would have expected going into either of those two waves.
What is the future of a business like Tech Mahindra? When I'm saying future, I'm talking about the delivery model. Work at home, hybrid, on-site, will it go back to normal?
I think work at home has been a big boom for that sector because it really changes the dynamics, it changes the potential cost base, the ability to deliver, and work at home will not go away, at least for the tech sector, because it's very easy to be able to monitor exactly the output, work in teams closely. The collaboration tools today are far better, and therefore we will see large aspects of that remaining as we go forward.
Can high commodity prices spoil the party? I mean, all the assumptions are centered around affordability. There is a drop in savings. Interest rates may not remain low for a long period of time, but if inflation comes back, prices have to be increased. We've seen that. You've increased auto prices 3 times in last 12 months. Can high commodity prices or high crude prices spoil our optimistic assumptions?
So that's just a reflection of global demand right now and of demand in India. So it will adjust, and we just have to make sure that we are monitoring inflation closely and taking actions in advance of that coming in. But at this point in time, we are seeing a significant surge in commodity, a significant surge in freight rates. But I would just look at it more as a function of demand right now, which I would expect to stabilize over the next few months.
Smart corporates like Mahindra Group, they always invest in the downturn so that when the upturn comes in, it is time to take advantage of that. So aside from India, where do you think the downturn is currently cyclical and you would like to invest in it? I mean, what I'm trying to understand from is that Mahindra Group does have global presence. You have global businesses. What happens there? Because each geography right now is walking very differently. There is no synchronized growth or global pattern.
So the way we look at it is scaling up our businesses. And in many cases, that will require investment in different geographies. But we're not starting with an investment in a particular geography for the sake of that geography. What we're looking at is how do we scale up our core businesses and establish an even stronger market leadership? How do we take our growth gems and get to a multiplication factor of growth there? And that is where we will be putting our investments. For us, it is very important to maintain that fiscal discipline as well. The ruthlessness that you talked about to ensure the returns are there. So that's a key aspect that we will look at as we look at our investments.
Before we wrap, and we've cut across range today from individual businesses to your view on macro and where inflation and commodity prices are headed. I'm going to take the clock back and talk about the IT sector. It was a sunrise sector of 2000. And then serious scalability has come in last 10 years for the Indian IT sector. So for this decade, which is one sector you would say is the sunrise sector, and which is one business where you think that it will go beyond sunrise and it will now reach serious scale?
I would say on that front that India is very well positioned in multiple sectors. So I'm not going to pick one particular sector. The IT sector is seeing a second wave, a positive wave in this case. In terms of the demand that we are seeing globally today for digitization and to reduce costs, we see a significant boom in the IT sector. 5G is contributing to that as well. And various technologies that are coming in are making life very different for various companies. And therefore, the IT sector will continue to see a strong demand over the next decade. The pharma sector in India is positioned extremely well. We would look at the auto sector and electric vehicles. Today in India, we're making cars that are as good as the best in the world, in some cases better. And we're going to continue down that path. So we see multiple industries. Tractors, for example, we're number one in the world globally in terms of the volume of tractors. And we can compete with all the big players globally in their markets as well. So we're seeing multiple industries where India is positioned well. And therefore, I would look at that to really drive what you mentioned earlier is the next decade of growth for India.
Mr. Shah, fantastic to have you. Stay safe, and I look forward to meet you in person very soon. We've been talking about our overdue coffee, but let's make it happen very soon now that things are normalizing.